This is the European edition of Breaking Banks, the world's #1 fintech podcast and radio show. We bring you the European unicorns, startups, founders, regulators, and leaders innovating the rapidly evolving fintech scene today. A truly localized podcast with both English and local language content, with some of the world's most well-known hosts and influencers in the fintech sector globally. Join us every week as we explore what makes the European Union a phenomenal proving ground for many of the fastest growing fintech plays in the world today. Okay, let's roll.
Hello, everyone, and very much welcome to another Breaking Banks Europe episode. You're listening to news from the FinTech Front, and this is episode number 239. I'm very happy to, during this warm summer, actually have a bit of a chat with people with quite some international experience on a very nice view on the fintech field. And we're going to have a nice conversation about some of the developments, what's happening right now, this July, across the world in fintech. And I'm talking to, I've got two great guests. Micky Tesfaye, he's the content manager for Money 2020, and he's been in fintech since 2017. So he's got a lot of experience and views to talk about. And of course, he can perhaps already share some of the ideas that are, tingling already at the agenda of Money 2020 across the world. And another great guest is Grant Easterbrook. He's been a long-time fintech analyst and expert in the market since 2011, which is, I think, a very long time since we didn't even start talking about fintech until 2014. Grant and Micky, great to have you on the show.
Yeah, great to be here on a very hot day in Amsterdam. Fortunately, we don't have to wear suits here because it will be a little too hot to wear suits in this weather. So we're surviving.
Yeah, great indeed. It's quite warm here in Amsterdam, indeed. And as with you, Micky?
Yeah, thanks for having me, Don. I'm in Tennessee, so it's extremely warm and humid. So I match your warmth and I raise your humidity. And
but you're in America, don't you have air conditioning? America has airco everywhere.
This is true. And as a European, that's a real struggle for me because I leave the house in a t-shirt and realize I can't enter anywhere because I don't have a hoodie.
Oh,
yes. Yeah.
Exactly. You need to dress for the airco, not for the weather outside.
Yeah.
But cool, great indeed. Let's indeed take the tempo relaxed so people can lay down on their bed beside the pool and listen to this podcast and stay up to date of what's happening in fintech and perhaps gain some interesting insights. I'm really happy to have you on the show here and really looking forward to learn a bit more about your insights. But maybe let's dive in a little bit deeper in your backgrounds. Micky, would you perhaps like to start and tell me a little bit about what you do for Money 2020 Europe?
Sure. So as part of a member of the content team for Money 2020 Europe, what I do and what I do with the rest of the team is pretty much, ideate our agenda. We do research calls, figure out and get a sense of where the industry is seeing the space right now. And we also try to be, forward moving and needle pushing, as it were. So we try to set and build an agenda that reflects what's going on right now, also speaks to some of the big changes that are happening, reflects on some of the kind of big issues that we might have gone through the year, but also identify where the new areas of conversation, geographies, focus, regulations may be. So I program that content alongside my colleagues in the Europe content team. And it's a real joy, actually, because I get to spend most of my days being the dumbest person in the room, which is a real fun thing, to be honest with you. Yeah.
So you can basically ask any question you want, you mean?
Yeah, because I'm like, all right, can you just explain this to me, please? Because, you end up talking to experts and you're like, do I get this right? And, it's fun to be able to ask any question, right?
Yeah, definitely. Definitely. Did you enjoy the June edition? Because, of course, it's only a little over a month ago that we had Money 2020 Europe in Amsterdam.
Yeah, it's incredible that it's only just coming up to 2 months. It feels like it was both like a lifetime ago and it feels like it was yesterday. Yeah, I mean, it was thoroughly enjoyable. Usually when you're in like my shoes, I think like you probably enjoy the Friday after the show's over because, we work a whole year to making sure like each of the sessions we programmed, it goes a hitch. But once it happens, it's the best feeling in the world, because ultimately, one of the reasons I've always been into fintech since I got into it is, I think, the kind of messaging between what fintech is trying to do and the problems it's trying to solve are very clear a lot of the times. And so you can really get to see the impact, and to kind of contribute to that is an incredibly nourishing feeling, to be honest with you.
Yeah, cool. It was a really nice addition. Also with great weather, by the way. So the beach was well made use of this time. That was nice to hear that. Cool. So thanks, Micky. Grant, how about you? What are you up to these days?
Yeah, so real quick about me. So I started covering fintech back in 2011, before that term kind of existed. That term came to be in 2014 or so. So got to know a lot of the early fintech movers and founders in the space. Worked on a startup as co-founder from 2015 to 2019. We built a chatbot. So we're going to talk about generative AI later. But before that existed, it was chatbot, rules-based chatbots. I worked on a chatbot. We sold that company. And then I moved to Amsterdam. So I've been living here. I'm American. I've lived in Amsterdam for 2 years now, working as a consultant in fintech and AI. I write a lot of content on those topics. You can find if you just Google my name. But I also started organizing an AI meetup here in Amsterdam. So if you're in Amsterdam, it's called the AI on the Amstel. The goal of the meetup is to have very technical AI discussions. So a consultant by day, but doing thought leadership and AI meetups on the side as well.
Cool. Nice going. And how do you find the community here, Grant? Is it going well to get people who exchange views, get good experts at the table, and get a good advanced level of discussions going?
Yeah, it's great. And part of why I started organizing this meetup is back in the States, I went to very technical meetups where they have someone who's a product or engineer or founder really in the weeds of how to build and deploy XYZ. I started going to AI meetups here, and there's a lot of good ones, but I wanted one where it's really in the weeds of how to build this stuff and deploy it. So I couldn't find it. I just organized it myself. So it's been great getting to know some of the AI founders in this community here and try to build that little meetup.
Yeah, really nice, and well plugged.
Well, I thought I'd bring it up because why not?
No, cool. No, so really nice. And I think indeed, let's perhaps then pick on the topic of AI, because of course we need to talk about AI. It's inevitable these days. So I think Grant, you had this news that was going on about ChatGPT, right? Tell us a little bit about it.
Yeah, so you probably saw the headlines that Apple's announced a partnership with ChatGPT to give you a more powerful AI system than Siri. We've all used Siri. It's not very good. Now, the details are really still TBD, but in theory, it's going to be some combination of your Apple phone can use ChatGPT voice and text assistant. And I can't tell you exactly how this partnership will work. It's possible with privacy concerns. It'll be pretty limited, but it's the first sign of what I see coming in the long term, which is a true robo-advisor. So an AI assistant that can talk to you about your finances with knowledge of who you are, age, income, accounts, etc. And that's really going to change finance, and we should talk about that today.
I think it's a very interesting foresight. And do you feel, I think there was some discussion as well about whether Apple actually need these kind of partnerships because they're lagging behind in their own development with regard to generative AI. How do you see that?
I feel like in the long term, it would make them more sense with all the resources they have to build their own model. But it's hard to read between what the board is thinking. They'd be doing that on the side while they use ChatGPT for the short term. It's hard to tell, but I would think personally with Apple's resources, I'd be building my own model, but I'm obviously not on the Apple board or the Apple CEO. But so I can't tell you how it'll work out in the long term, but at some point you will have some kind of Apple assistant here that can talk to you based on knowledge of who you are. And that is coming some timeline TBD in the next few years.
Yep. Yeah, it's quite interesting. And do you actually feel that you would see then still a particular, you mentioned, for example, like the extension of the robo-advisor, a true financial advisor, but that would still be a specialist. While actually, of course, once you actually talk about ChatGPT and you can feed it in with anything, it could be a general assistant that could basically be specialized in everything.
Yeah, Micky, do you want to say something? I have an answer to that, but Micky, do you want to chime in there?
I'll chime in afterwards. Go ahead.
Yeah, so I've tried to test out a lot of the big generative AI assistants and ask them a series of financial questions. And generally, they're already at the level of being able to help you with basic budgeting and basic financial planning. So what I mean by that is, I'm a 45-year-old woman living in Portugal. I don't think I want to retire to Greece, making this up obviously on the spot. I have this much in savings. Is that goal reasonable? can already pull up pretty good answer based on data, the location you're looking at. But if you ask something that requires more advanced calculations, so, here's how much I have in my pension, could I transfer that to a different income stream? If I had this much money and doing math, then it tends to start to break.
Yeah.
So maybe that'll change over time. But right now, the big limitation is doing actual advanced calculations. That's out of financial planning. But short of that, you kind of do it already. So it just needs to have knowledge about you to do it even better.
Okay.
Yeah.
How about you, Micky? What are you looking forward to this combination?
I mean, I think the point that you touched on about why Apple isn't building its own LLM is interesting to me, especially given that we know Microsoft is the owner of half of OpenAI now. So it's a very kind of strange way for this to happen. So I think that makes me think that I think Apple is probably just very early in the stages of engaging with all the various big LLM producers, and I think it will probably end up creating or giving option to integrate all of them, because I don't see why they would just go ahead and integrate OpenAI, in particular when we know on the one hand how serious Apple has been over the years in terms of privacy, in terms of the way it produces its and the way it creates its hardware, right?
Yeah.
I mean, going back a decade now, I remember when there was some of the Boston Marathon attacks, right? One of the big legal repercussions was Apple's unwillingness to open up that data to the FBI, if I remember correctly.
Mm-hmm.
Even on the other side, the litany of privacy issues OpenAI has faced, right? I mean, I think it's still facing a lawsuit from Scarlett Johansson, for example, as well as a bunch of other seeming potential lawsuits from writers, from content creators. I'm not sure that this dynamic necessarily makes sense in that kind of straightforward partnership. I think within the context of the financial advisory piece, I think, Grant, you're absolutely right. I think it does open up a really fascinating future. But I also, again, I think, finance is one of those ones where hallucinations from ChatGPT or Claude, whoever it may be, they're not easy to claw back, right? When it comes to money and when it comes to people's livelihoods and so forth. So I'm a little bit less kind of, I'm a bit more on the fence, let's say, in terms of thinking about what that implication would look like. So yeah, I think that's my kind of.
It's definitely interesting to challenge that from that perspective. I think that's why I think you still see very limited use of AI in, let's say, generative AI, especially within the financial services industry, because you see that the reliability is still not at the level where it should be, outside of the indeed copyright issues and other ones. But I'm also triggered by the concept, what you mentioned, Micky, about the link between privacy and how Apple has actually profiled itself, especially to be, the secure access to the digital world without giving up all your privacy. That they made quite some big steps in that direction. So, but potentially, and of course, we still indeed have to figure out exactly what this collaboration means, because it could also be. But then it might actually be kind of non-news, as in, this is the first, but we're actually going to work with everybody, right?
Yeah, I think that's definitely the case. I think I do see a potential for the role of Gen AI or AI tools in finance, but even there too, I think maybe one of the things that we might have to start coming to terms with is a changing of how we view financial services as these new technologies start to change it, right? I mean, I think part of investing, right, is information asymmetry, right? You try to kind of identify gaps based against the status quo, for instance, or by finding new advantages unique to yourself. So if you then have this kind of significant access to consumer data, for instance, right, to take a tangent, one of the issues Robinhood struggled with this order flow business, right, was the fact that it was perceived to create an unfair dynamic between individual investors on the one hand and the market maker on the other. Not that it did do that, but just that perception alone creates a significant an issue. And I think there are
Yep.
these things that we probably will take some time to kind of crunch over. And I think that might make us think a little bit differently about what AI-enabled financial advisory might look like.
Yeah, I think it's also definitely quite likely that we will see regulators and governments step into this game, because you already see that they're very worried about the development of AI in a lot of fields. And I think finance is definitely under the magnifying glass from that perspective.
And one last note on hallucinations. So I've tried to actually test out lots of different use cases and see where the AI hallucinates. And again, it's the calculations and then really specific questions where there's not a lot of examples to learn from, right? So the AI is built off trillions of examples. If you asked, I'm a Mongolian citizen moving to Canada, how does that change my tax implications? It's likely to hallucinate. But it's still pretty good. I think people don't realize it's already pretty effective. And the way it always gives a response, it never says, I recommend you do this 100% certainty. It says, here's a possible solution. Here's some details behind that.
Mm-hmm.
But it's already always positioned in a way where it's not trying to convince you this is 100% what you must do. And it won't give you trade advice. So it's already pretty, I think people don't realize that it's already pretty good at acting like a financial advisor, except for very niche cases. So just want to add that in there.
No, exactly. I'm really curious how this will evolve. So definitely curious to keep on following this and how all the other tech companies will respond. But maybe if we then talk about sort of the political angle of this, it might be interesting to jump over to what's going on the political side in the US at the moment, right? We're in the middle of the presidential elections coming up with Trump versus potentially, most likely, Kamala Harris. And what we saw was that Trump made some very interesting remarks and ideas about crypto. Micky, can you tell us a little bit about that?
Yeah, so I think there were probably two main parts of it, or one main part with some interesting Trumpisms. And the main part is the suggestion that the US under his watch will be creating a national reserve of Bitcoin. And I think in part it's to do with the amount of Bitcoin the US currently has through seizures or whatever. And his plan is, I think, to maintain that as a reserve currency, I guess, in crypto. And I thought it was quite funny. He said on his first day as president, if he were to become president, his first thing will be to fire the chair of the SEC, which I think is a fascinating way to approach this, especially, within the crypto space, right? Where, of course, given the SEC's fairly hardline approach towards the crypto space, I think that comment was met with a lot of enthusiasm. I'm not sure what the implications over the long run would be and whether that is a likely thing or not.
Yeah, it does feel a bit like this is a very opportunistic approach that Trump has taken here, because it's, of course, interesting to tap into the money that's locked into crypto and the entrepreneurs that are seeking for a bit more leeway to operate there. Do you think that's a main idea behind it, or does he have a vision, you think, of how this could be a potential have a positive effect on the economy?
I mean, I think, Grant, you could speak on this a lot more confidently than me, but my sense is that, first of all, I agree. I do think it is opportunistic. Ultimately, I think that the crypto community in the US, but also lots of other countries around the world, is one that's fairly capital rich, but politically very poor, right? There aren't natural alliances for the crypto community. So obviously, I think that's a potentially significant voting faction that Trump is trying to tap into. I'm not sure that in the long run, I'm not sure what the economic benefits are necessarily by having a Bitcoin reserve. And I say that only because of what it can unleash, right? I think one of the core parts of why the US is the world's dominant economy, and that is very difficult to change, is the dollar. Like, the dollar is the global trading currency. Once the US in itself starts to cannibalize this incredible monopoly it's had, then that is going to be a challenge for it to maintain that, right? I think we've seen with Trump in previous years when he was president, how he approached the issue of devaluation of currency by China, for instance, where he took a very hardline stance on it. Now, if he was taking such a hardline stance on a foreign nation, impacting or manipulating the US currency, I'm not sure that his view will have, or his approach will have that much support, even within his own party, let alone the wider kind of ruling structure of the US.
Yeah. Or could it be a next Bretton Woods moment where they actually set up their real a US-backed stablecoin that actually could parallel the dominance of the paper US dollar? What do you think, Grant?
Yeah, lots of things to comment on there. Just one thing I'll throw in to start is that there's been different surveys. It's hard to estimate this, but one survey found that 40% of Americans own some form of crypto. And obviously that may be a high estimate, and that varies from folks who are very passionately crypto advocates to folks who have a tiny amount of ETH somewhere. But to me, this seems like just a political appeal to that group and try to capture the folks who value crypto in some way.
Yep.
Whether or not the strategic reserve ever happens, hard to know, but it would be really good for crypto just on that one issue alone if Trump were to win and would take a less computational approach to crypto. Obviously, there's many other issues going on in this election, but purely for the purpose of crypto, the current administration has been somewhat computational, like a lot of governments around the world, to be honest. A lot of lawsuits, not a lot of clarity. So that could change a lot and help all the capital and talent of the states flow into crypto more freely. So if it happens, it certainly would be good for the crypto space as a whole.
Yeah. And I think he's also accepting crypto now for his campaign, right?
Yeah. I mean, there's a good portion of Americans who own crypto and they care about this thing. So it's a smart political strategy to try to capture that group's attention.
And there's also a kind of a strong, I think, anti-Wall Street sentiment going on. I think also by supporting Bitcoin, you could also argue that you're actually trying to beat off Wall Street at the same time, to a certain extent.
Yeah, I feel like people tend to take a very maximalist perspective that like either Bitcoin or crypto will win or the US dollar will win. I think in the reality, there'll be multiple winners in the long term, right? It's hard to imagine the US dollar totally going away. But you can imagine cryptocurrencies getting more popular, especially in areas with weak rule of law or unstable currencies. So I don't think the maximalist approach is correct. I think in the long term, there'll be multiple options for you to send money abroad, one of which is the US dollar or US dollar stablecoin, one of which is a more independent crypto.
Yeah. But I mean, I think that point, sorry, Grant, is really interesting about the maximalist, but I think that is the case because of the very nature of money, right? Like governments have two main monopolies anywhere in the world, right? One is monopoly on violence, right? You have, police force or military, whatever. Like there aren't many places in the world where multiple entities have that right in one.
In any case, not many successful ones.
Not a place you want to live if there's multiple entities with that rule. Yes, yeah.
As in, with that right, there are many entities that want to exercise it, but there aren't. But on top of it, right, the ability to create your own money is a very kind of core part of sovereignty, a nation state's sovereignty, right? The US has a huge trade deficit, a significant amount, like virtually one that's impossible to ever be paid. But that could be maintained because the US has the hegemony on the US dollar. Now, once the US itself starts to weaken that by saying, hey, we can actually live in a multi-currency nation within our country, let alone around the world, I think that starts to create a set of issues for the US, such as, all right, why can't other countries have the same deficit? Or why can't other countries just print the money they want? And I think that's the challenge. And I think as much as maybe their administrative side of the last 4 years have been a lot more hardline, I think part of that is less political and much more to do with the structure of the financial services and system, right? Like the SEC is trying to protect, and based on also, and as part of the Federal Reserve, as part of these instruments of governance, right, that control the money supply. Right now, we had the issue with inflation. Yep. If you didn't have that control on it, it's going to be very difficult for the central bank to be able to, tighten or decrease interest rates, right? So I think.
No, totally agree. I think it's a really tough situation for governments as well, especially since crypto circumvents the main operational model of the financial industry, and especially since politicians tend to keep on overspending and central bankers having to fix it afterwards. Right? If you break that relationship, which crypto potentially can, that's a tough situation, which I think they're trying to avoid. So it feels a lot like, especially if you also look at the ETFs that have been created and other ways, for example, also European regulation with MiCAR. It feels like very slowly crypto is being pulled into mainstream finance one way or the other. Everyone's now just doing their AML checks and everything else on all the crypto transactions. So it becomes more and more mainstream from that end. And control.
Yeah, I'll just add quickly. I'm not a crypto maximalist at all. And there's a couple issues you mentioned that we won't have time to cover here on this short form podcast. But the way I think about it is, regardless of what happens to U.S. administrations over time, crypto is now global. So even if the U.S. went super confrontational or super anti-crypto, you look at the charts that Chainalysis does every year of most popular countries that have the most crypto usage around the world. The U.S. is number 4, I think, but most of them are just developing countries that have unstable currencies or weak rule of law. So crypto keeps on churning, and whether individual government here or there is pro or anti that, in the long term doesn't matter that much in my mind. So it will either succeed or fail, but it'll happen around the world, and one government's actions doesn't really change it that much.
No, true. Indeed, could do it for let's say the price chasers, but indeed as a token of use to exchange value, it will definitely keep its use in those regions most likely. I totally agree. Yeah.
Yeah, it could be good, not really achieve what it hopes, but that's a longer term thing will be determined, and it won't really matter whether one government and one administration said yes or no to it.
Yeah. No, true. No, indeed, and let's say, well, maybe then to continue on how tough it can be for the innovators to actually try and change the system. We've seen some interesting struggles here in Europe as well, with Revolut trying to gain a banking license after operating with e-money license for a very long time from Lithuania. They now finally got their banking license in the UK. I think they've been chasing that for about 3 years right now. But then the question is, because especially for probably the users of Revolut are really going to wonder, like, but wait a minute, it's already operating like a bank. What does this mean?
I mean, I think what it means is beyond obviously having the licensing, what it means is the products that it can actually start to offer, right? It can now offer things like loans, can offer mortgages, it can offer high ticket services and products that make the money for banks. So I think that's the thing that Revolut is going to want to have and have access to, is to move away from just being a spending card to actually being people's banks. So one of the, back in the days when I was an analyst, one of the data points you look at for digital bank adoption was that, a Monzo might have 5 million or however many it was at the time users, but actually then a very small subset of those people pay their paychecks into that. They only use it for very specific use cases when they travel for the foreign currency or to spend. But that's a pretty costly endeavor for these neobanks, because what you need is, one, having that, people paying into your bank means you have, one, longevity, right? You can plan and you're going to get a sizable amount of money coming into that balance sheet, but then you're going to be able to start offering higher value services. You have better access to their credit data. You can start lending them more money. You could start offering them, all types of solutions. So I think that's the big win for Revolut, is being able to expand into services that will, one, actually allow them to take customers away in a serious fashion from the big banks, and two, to also, boost what they were able to achieve last year, which was the first time they achieved full profits. So I think this is definitely going to help on that route.
Yeah, because currently the earnings model is, I think, just a fee based on your payment cards, right? And with especially the premium models they charge on. But for the rest, they've got quite a wide business already, with a lot of third-party services that they bring in as if they were their own services, right? So I think that's what they've been very practical, I think, pragmatic, I would say, in their approach of looking like a full bank so far. But do you believe that they actually will try to bring on these services, especially the most profitable ones, to their own balance sheet and their own operations over the coming period?
I think so too. I mean, I think again, look at like Revolut is interesting because it really kind of focused on the scale side without necessarily having to like focus on one single market. Its peer is like Monzo is a good example, right? Like started around the same time. Monzo doesn't have that same scale size, but in the UK, it's become especially entrenched, right? Recently, they started launching pensions. They has started launching a children's account, and I think in the future, obviously, those kind of the data they gather from that will allow them to also offer high value services like mortgages.
Yeah.
So I think that is the kind of Revolut.
Cool. How about you, Grant? How do you look on this?
Yeah, I'll just add quickly because I know we're coming up on time here that, I think I'm tracking fintech since 2011. And in the beginning, I remember neobanks, people were sort of skeptical. They were perceived as not having any kind of traction, or they would never take market share from big banks, never get licenses, blah, blah, blah. But really, since it feels like the last 5 years, they've started to really get traction and take real market share. And it's exciting to see this actually happening where around the world, the last 4 years, a lot of these big neobanks are getting banking licenses. They have millions of customers, and there's real meaningful competitive pressure on the big banks. I mean, here in the Netherlands, we have Bank. I'm a Bank user. It feels like neobanks have gone from an idea to actually reality. And this is another sign of that step towards the old school, quote unquote, traditional banks having to face real competition. So I'm excited to see it.
Yeah, no, cool. I think, and so what do you expect about the growth models, right? So I think we've seen a lot of these neobanks growing on the back of virtually zero interest rates. So a lot of free money available. And of course, we saw funding rounds and valuations going through the roof, especially in 2021. What are your expectations over the coming time? Because I think currently at the current cost of money, it's becoming very expensive to actually grow as fast as they did back in the days. Do you see most of them, like also Revolut and also Bank, for example, and other neobanks have been showing off profitability over the recent period?
Yep.
Is that going to be the way forward, making your own money and reinvesting in further growth?
Yeah, the way I think about it is banking really has, for a lot of reasons, natural tendencies towards larger players, right? And so there are a lot of neobanks, a lot of them got funding, but it feels like to me, where you draw the line, maybe top 15 or so, there'll be, over the next few years, we'll see that sort out, where there'll be some of the winners that kind of entrench their position, manage to get through the funding bubble burst and really focus on profitability, and others that end up being acquired or sold or kind of wound down in some way. So even though we're disrupting big banking, the same phenomenon of banking tends to lead to a couple of big winners, I think will apply to neobanks as well.
But you think it will also potentially have some local winners? Because I think, let's say, Europe has still 6,000 banks, right? So apparently there's room for competition.
Yeah, like I don't mean these are all going to fail, but really that you'll see a lot go to the winners is the best way to say it, right? Because the same thing happens in banking, excluding fintechs, where yes, there are lots of banks, but in the Netherlands, there's a top 3. In a lot of countries, there's a top 1 to 4 in some way. But I think that same phenomenon happens over time where there's a lot of a winner take most sort of outcome.
Yeah. Micky, what's your view?
Yeah, I mean, I think I tend to agree. I think the couple of things that are interesting that you've touched on too, right, is that the change of the interest rate dynamic, I think, is a significant thing. Because I think part of that too means, these neobanks have to make money, right? That interchange money just based on the transactions and the taps is not going to cut it. You're going to need to have some bigger sized funding revenue drivers for you. And I think a really good example of where I think the neobank market will go to is Nubank in, which started out in Mexico, but is now probably one of the biggest banks, full stop, in LATAM. And I think what was interesting with them is they started with a credit card, right? They started with a genuine revenue driver and then they built that out. And I think what we're seeing in all of these different neobanks is coalescing towards that, which is actually they're starting to realize, you know what, maybe the banks did know something around their model, and maybe the banks just had this huge moat of no one is going to really take a lot of our, customers away because of the poor customer service. But what the banks maybe were not too, willing to talk about openly is actually we make a hell of a lot of money by lending to people, by taking in deposits, and by 5x, however many x, especially like 3-4 years ago, right? A credit card might cost you 20%. In Europe, interest rates were below, right? Like you were paying your bank to hold your money. So I think the neobanks are starting to wake up to that. So I think that's going to be a big thing. And I think I absolutely agree too, right? In terms of like the funding crunch that's happened, right? That's going to put more pressure on every dollar you're going to get now. You're going to have to show a lot more potential revenue generated from it.
Yeah, no, totally agree. Totally agree there. I think it's also quite interesting how that's going to change the landscape. But you see indeed that the neobanks are becoming more like regular banks in the process. In any case, partly also driven by what the regulators would like them to do, right? Cool. So, and then, but then if we talk a little bit about sort of, because we indeed have to almost wrap it up, but maybe just one thing to just highlight. You came up with it, Micky, that you flagged that M&T Alan actually got a big funding round, Egyptian fintech lender and payments company. Should we look for all the exciting stuff now from to Africa, especially? I think it's interesting because you see indeed one of the challenges that the neobanks currently have, of course, is that especially in Europe, but I think also in the US and a lot of other places, you see that the regulatory environment has become a bit more tough for any financial player. So I'm not sure if everyone, if they had the chance, if they would actually start, if they would have to choose between payments and e-commerce, they would rather probably go for e-commerce these days rather than payments, because you save yourself a lot of trouble. But I think in Africa, I think there's some countries are still catching up. So you actually have the regulatory opportunity there, I think, is still much bigger. Tell us a bit about that, Micky. What do you think is going on there?
Yeah, I mean, I think my view is, it relates to the point we made earlier about the interest rates, right? Like, I think over the past 15 years or so, I think one of the downsides of the low interest rate environment is that once fintech has identified a potentially interesting niche and vertical, that VC money has chased that to oblivion, right? So then, you end up with a number of just the same players emerging. And I think that's an issue that we faced, and we can kind of see that the market ends up being saturated by too much of the same type of players. So I think that's one big issue where like I think a lot of the options for innovation are getting increasingly stymied in developed and established markets. I think the second bit is, around some of the evolution in regulation and also just bigger trends, right? Things like open banking are fundamentally very problematic for interchange-based fintechs, right? Fintechs that were built on interchange. It's not a model that really is built to sustain a huge number of multi-billion-dollar businesses, right? Like Revolut, all of these were built just on that interchange. But as that's changing, you have to find new ways of thinking about financial services. And I think that's where regions like Africa, Southeast Asia, LATAM become particularly interesting, because they don't necessarily have all of these regions have their own localized variants. They have their own unique requirements. And so that gives an opportunity for a new way of thinking about financial services to imagine those regions and also start permeating into our minds here, right? So I think, Africa is one of the biggest areas of growth because of, one, just the low starting point, two, just the sheer number of people there, three, age of the people there. Africa is going to be that continent where like virtually everyone there, but now, it's virtually 70% of the world there doesn't know anything outside of a world without mobile phones. 5 to 10 years, like the amount of innovation that will emerge out of that is going to be significant, in my opinion. And I think what we're now increasingly starting to see with this story, but we've seen it with Flutterwave and other stories, is that African-based fintechs are starting to not only do well there, but they're starting to expand into these other regions that players in Europe or other regions kind of failed to take advantage.
Totally agree there. I think it's very interesting to see, and well, I'm really looking forward to see more of these developments coming, and we probably should really keep an eye out. What is your view there, Grant?
Yeah, I'll just add real quickly again. As similarly as look at the last 10 years of fintech, in the beginning, all the headlines and news of the big funding rounds were mostly in North America, rich Europe, rich Asia. And there wasn't as much fintech investor interest in serving underbanked, let's say less banked regions of the world. So it's really exciting to see over the last few years, there's been a lot of unicorns in parts of the world, let's say where they need really localized services. There's companies in Africa where they go to rural communities and help you open an account in person for that person who struggle with traditional bank KYC requirements. There's a company in Panama I find really interesting where they have kiosks around the country where you can open an account and get a card out of the kiosk, right? So there's exciting to see all the unicorn activity and big fintech excitement in areas where they have less access or it's harder to get access to traditional financial services. So I look at that headline, just the latest example of that broader trend.
No, I totally agree there. I think you see some really interesting alternative business models where you get either like banking super apps, where you get like supermarket banks, or you get all these kind of different flavors of financial services that we might not be used to in Europe or in the US, but they actually show really nice examples of how you could actually embrace technology and finance at the same time.
One thing on it briefly is my favorite examples in the Philippines. Pawn shops are very ubiquitous around the country, and the two biggest pawn shop chains have become massive financial services providers because they're already in person around the country, and people are using them for one side of finance, pawning, and they just started adding payments, wallets, remittances, and just a very interesting, innovative model specific to what Philippines needs. So anyway, I think that's cool.
Yeah, really cool. So thanks. I think we need to wrap it up. I think we're already a little bit off time, but I hope we didn't bore you and you enjoyed the insights that we were able to bring you with our tour around the world of developments in fintech. Grant and Micky, thanks a lot for joining me on this podcast. It's been really wonderful to have you on the show. Anything particular you're looking out for after the holiday season, Micky?
Just the one thing. There is this event in October, end of October. It's called Money 2020 USA. If you haven't been, you've got to come.
Indeed, it's in Vegas. So, good to enjoy your time there. Great, thanks, Micky. Grant, anything you're looking for?
Yeah, I don't have a great final sign-off compared to a Vegas show, so I don't have anything in particular looking for in the next month. I would encourage you to go to Vegas for Money 2020 then.
Cool. Thanks a lot, guys. It's been really wonderful to talk to you. Really enjoyed it. It's good to always sharpen your thoughts in a conversation like this. I hope everyone who listened that you enjoyed the talk that we did, and looking forward to hearing you again on the next episode of Breaking Banks Europe. Have a lovely day.
Thanks for listening to Breaking Banks Europe, a Provoke Media podcast in cooperation with FinTech Stage. Don't forget to tweet us out, shout out, or post to the team at Breaking Banks EU on Twitter. If there's something or someone you'd like to hear on our cast, let us know. See you next week on Breaking Banks Europe.